Good morning to you, Dom, and that's a great question. There's a lot to unpack here. What we know is that President Trump has said that companies committed to build in the U.S. won't have that tariff charge. What we don't know is the following. Will the tariffs apply to the raw chip itself or the end product, like the phone or the laptop that's the chip is inside? How much investment will firms need in the U.S. to avoid the tariffs? And how much of the product actually needs to be made in the U.S., given the global supply chain? These are just a few of the questions. Now, if we break down the major companies involved, and you showed some of those stocks there, first, TSMC, the world's biggest chip maker. This is a company that has committed nearly $200 billion into the U.S., including cutting-edge chip factories. So it's likely they could mitigate this, and you're seeing in Taiwan a big jump in shares there. Samsung has also pledged investment in the U.S., and Apple said overnight that Samsung will manufacture its image sensor for its upcoming products in the Texas factory as well. So that's another company the market thinks could avoid the tariffs. SK Hynix, meanwhile, which supplies NVIDIA with memory chips, announced plans for a nearly 4 billion chip packaging facility in the U.S., and NVIDIA said it plans to produce up to 500 billion of AI infrastructure in the U.S. via manufacturing partnerships over the next 4 years. And you are seeing some of these stocks up because investors feel these are the kind of companies that have committed to the U.S. operations that may be exempt or may avoid some of the worst tariffs. If there is more chip plans or plants even built in the U.S., of course, this could help that long tail of chip suppliers in the supply chain, companies like ASML, for example. And that's my initial read right now based on what we know. But right now, of course, still little detail on the exact application of the tariffs, and it's hard to gauge what products exactly will be affected, Dom.